Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1-week basis, all 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 0.4% for CBAM portfolio number 5 up to minus 0.13% for CBAM portfolio number 1, in which was a relatively risk-off week. In terms of detractors from performance, we did see some pullback from iShares Global Clean Energy, despite the slight improvement from this also being a bottom performer last week, down more than 2% at this time of reporting last week, but this week down minus 1.94%. We did see some spillover effect from some of the headwinds that we've been seeing as the Chinese regulators continue to crack down on both technological companies, gaming, casinos, and most recently we've seen some cracks starting to show, really permeating the Chinese property environment, and this has built over to the broader emerging markets, and that would see legal and general emerging markets down minus 1.54% on the 1-week basis. In terms of positive contributors to performance, the fiscal stimulus optimism still continues to play out in Japanese equities, and both our Vanguard FTSE Japan Index Tracker and JP Morgan Japan Equity Hedged Fund have been up more than 1.78% on the 1-week basis. On a year-to-date basis, 9 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 2.72% for CBAM portfolio number 1 V2 up to 12.76% for CBAM portfolio number 5. Most notably, the narrative continues to be risk on a year-to-date basis, and that would see some headwinds for 91 Global Gold Miners alongside iShares Physical Gold, both being down more than 8.3% on a year-to-date basis. We also continue to see some weakness for Spider UK Gilts, down more than 4.6% on a year-to-date basis, as investors seek higher yields in this ultra low interest rate environment, and that would lead to a sort of investor exodus to bonds which they think that can provide their portfolios with a greater return. In terms of positive contributors to performance, we do continue to see a runaway performance from our equity Indian subcontinent position, and that would see that position up 40.99% on a year-to-date basis, alongside some recovery as European equities as well begin to come back online, and that would see a strong performance from Allianz European Continental Equity, up 22.27% on a year-to-date basis. On this week, when reporting the year-to-date numbers, we have seen that the S&P 500 has managed to edge above of the UK smaller companies, which was in position number 3 in terms of contributors last week, and that would see the S&P 500 returning 20% on a year-to-date basis.